Folks, I want to talk to you about the top 8 business lines of credit with bad credit. Don't go anywhere. You're going to love today's conversation. I guarantee it. Welcome back, folks, to another edition of the Awesome Certificate Show. How are you today? I hope you are doing fantastic. I'm doing marvelous. If you were to ask me, if you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's discussion, I want to talk to you about the top 8 business lines of credit with bad credit. Okay, number 8, we have Wells Fargo. Our score 7.5 over 10. So when you think about Wells Fargo's lines of credit, this is really great. And the cool thing is that Wells Fargo offers 2 unsecured lines of credit. And so they have the Wells Fargo business line and the Wells Fargo small business advantage. The thing is, if you have bad credit, you need to have a relationship with Wells Fargo. Okay, no personal guarantee if you have a strong MPR multi-product relationship with the bank and are requesting a line under $50,000. So if you are requesting a line under $50,000, no problem. You will not have to post any guarantee. Now, the minimum credit score for a Wells Fargo business line of credit is 700, but they will lower it. They will actually reduce the FICO score to 550 at least if you have an MPR with Wells Fargo and the business has been profitable for the last 3 years. Okay, maximum loan amount 30% of annual revenue. So it's really important to understand that what we love is both of these unsecured lines of credit get you access to the Wells Fargo Business Line Rewards Program. Okay, so you will earn 1 point for every dollar you spend on net purchases you make with an Access card, which lets you make purchases directly from the credit line. And you can also earn 1,000 bonus points every billing period if you spend $1,000 or more in net purchases. Okay, so we have the Wells Fargo business line. This is really good. You have rates as low as prime plus 1.75%, no collateral required. You have automatic enrollment in a free rewards program. This is really good. And this line is also great for startups. Okay, so sometimes credit lines require you to have a track record of several years in business with the current owner to qualify. The unsecured Wells Fargo Small Business Advantage does not, making it a great option for startups, though it does have a 5-year term after which it may be reviewed. Okay, so the unsecured line ranges from $5,000 to $50,000, and there may be an annual fee depending on your credit line amount. Okay, so credit line from $5,000 to $9,999, no annual fee. Credit lines from $10,000 to $25,000, you have a $95 annual fee, and credit lines from $25,000 to $50,000, you have a $175 annual fee. Number 7, folks, we have PNC Bank. Our score 8 over 10. And what we love with PNC is the flexibility. Okay, so we love PNC. PNC actually offers a line of credit of up to $100,000 that is well suited for established businesses with strong, bad, fair, or good credit. And the PNC business line of credit can be funded as quickly as the same business day. So the maximum loan amount $100,000, the minimum credit score 720, but they could lower the minimum credit score to 550 if you have a strong multi-product relationship with PNC Bank and the business has been profitable for the last 2 years. The maximum line amount 40% of annual revenue. Okay, no personal guarantee if you have a strong MPR with the bank and are requesting a line under $50,000. Okay, if you go above that, they might ask for a personal guarantee. The estimated, so this is really good. And what we love is that this revolving line of credit works similarly to a credit card, but you'll need to have a strong application to qualify. Okay, what are the pros and cons here? Pros: this is a bank line of credit with competitive interest rates. They can fund as quickly as the same business day. You have monthly repayments with no set term. This is really good. What about the cons? It requires a high minimum credit score if you don't have an MPR with the bank, and it might require some personal guarantee depending on the line amount. And businesses in certain states and industries are not eligible. So please check this with PNC. Okay, this is very important. And what we love here is that this PNC lines of credit gives you several years. They give you several years during which you're not making any payments, as long as you're just making the minimum payments. Okay, you're not paying the principal. Okay, you're just making the minimum payments. Now, if you're interested in having an amount that goes beyond $100,000, then you need to secure the credit line. So if you secure it, they could actually approve you for a line of credit that goes all the way to $3 million. Did you hear that? $3 million. So when you secure the credit with business assets, with anything, equipment, with eligible assets, that is, you can go from $100,000 and one to $3 million. This is good. So you can secure the line by equipment, property, or items that meet a certain value. Number 6, folks, we have here Navy Fed. Our score 8.5 over 10. We are talking about Navy Fed's business line of credit. Okay, this is great if you're looking for a credit union business line of credit, and if you need help managing working capital, operating expenses, cash flow, or payroll. They have a strong business line of credit for you. Okay, and what we love is that you're able to this is a very flexible line of credit that allows you to use funds as needed instead of receiving a lump sum, meaning interest is only paid on credit used. Okay, and so this revolving line of credit is used for operational purposes, starting as low as $35,000, maximum $250,000, and credit score 675, but they can go all the way to 550 if you have an NPR with Navy Fed and you have a strong internal score with Navy Fed, and the business has been profitable for the last 3 years. Maximum line amount 50% of annual revenue. Okay, and no PG if you have a strong NPR multi-product relationship with Navy Fed and you are requesting a line under $75,000. Okay, and the variable rate for this line is tied to prime. The term length can actually be flexible, and if you are asking for something above $75,000, it must be secured. Okay, and some fees may apply. So what we love is that this line of credit is great for established businesses. Okay, if you want to bridge cash flow gaps, this is good. Business growth, unexpected expenses, other operational purposes. And to apply, you basically need to be a business member of the credit union. This is important. They want business tax returns on their existing ownership for the most recent 2 years. Okay, a business plan may be required. Personal tax returns for all owners, guarantors, most recent 2 years. Financial statements, balance sheet, profit and loss, accounts receivable, accounts payable, agent report, debt schedule. Personal financial statement for owners, guarantors. Okay, proof of collateral for amount going above $75,000. Additional documents may be required, so it's a lot better to talk to Navy Fed before applying, and they might have a personal credit check for you. So you can see that Navy Fed is really, I would say, procedural. It's really methodical when it comes to checking the application. So there are things you need to provide to certain paperwork. So please check with them before applying. Number 5, folks, we have Blue Vine. Our score 8.5 over 10. So when you think about Blue Vine, I want you to think about innovation. I want you to think about online business line of credit. Okay, the maximum loan amount here, the maximum line amount is $250,000. The minimum credit score 600, but they can lower it to 500 if the business has been profitable for the last 4 years. The maximum line amount or loan amount 45% of annual revenue. Okay, and so the estimated APR here goes from 15% to 78%. And Blue Vine's line of credit provides fast working capital for short-term borrowing needs. Okay, so you got to think about short-term here. Okay, so what are the pros and cons when we think about Blue Vine? What do I want you to think about really? The pros: cash can be available within 12 to 24 hours. So this could be really fast. It really depends on the availability of the required paperwork from you. You really need to give them everything they're asking for ASAP for them to fund you as quickly as possible. There are multiple term lengths for different financing needs. They have low minimum credit score requirements, and this line of credit is startup friendly. They accept borrowers with a minimum of 6 months in business. Okay, what about the drawbacks here? What are the drawbacks? So they may require weekly repayments. So this could be This could be disruptive to your cash flows, but again, with proper planning, if you are thinking about things in advance, this could be a good opportunity, okay? And this may require personal guarantee for large amounts. They're not available in North Dakota, South Dakota, or Vermont because of banking regulations there, and rates can be high compared to traditional lenders, okay? And in terms of qualifications here, folks, so minimum credit score 600, but again, they will lower it to 500 if the business has been profitable for the last 4 years. Maximum loan amount 45% of annual revenue, and the minimum time in business 6 months. Okay, the minimum annual revenue $120,000. So we're looking at a monthly gross revenue of $10,000. Okay, if you're making at least $10,000 in revenue, not income, revenue, pre-tax revenue per year, you could qualify for a Blue Vine business line of credit. Okay, this is really great. And if you have a poor credit, just be sure that you are ready to provide additional information to sort of counter that detrimental factor, that detrimental criterion on your application. Number 4, folks, we have Fundbox. Our score 9 over 10. So this is kind of cool. When we talk about business lines of credit for bad credit, Fundbox is a great contender. Okay, and Fundbox offers business lines of credit of up to $150,000, and they don't require physical collateral. Okay, now borrowers are subject to UCC blanket liens, however, and they may be required to sign a personal guarantee if the line amount is kind of high. Okay, so maximum loan amount $150,000, minimum credit score 600, but they will go all the way to 500 if the business has been profitable for the last 3 years. Maximum loan amount 60% of annual revenue. No personal guarantee for amounts that are lower than $75,000. Okay, and the estimated APR 10% to 79% to 80% rather. Okay, and the Fundbox, we love the fact that you can use their line of credit for everything. You can fill a cash flow gap, you can take care of inventory supplies, you can pay suppliers, you can actually you can hire extra staff, whatever it is. This is really great. What are the pros and cons here, folks? So what we love is that the financing is really available within 1 business day after approval. They are really fast. They can move really fast, okay? And you have a simple application with minimal documentation required. This is really good. And they're also friendly to startups, okay? They accept borrowers with a minimum of 6 months in business. And they have a low minimum credit score requirements and no prepayment penalty, account maintenance fees, or inactivity fees. What about the drawbacks here, folks? Rates are kind of high compared to traditional banks, okay? When you compare this to PNC Bank's rate or Wells Fargo's, you see there's a huge delta, okay? And they may require a personal guarantee for line amounts that go above $75,000, and you cannot use this to build business credit. They don't report your transactional activity to the business credit bureaus, okay? Dun & Bradstreet, Equifax, Experian, SBFE, and LexisNexis. They don't do that. And weekly repayments required over a short term. So we're talking about maximum of 24 weeks. Okay. So overall, this is what you need to know. And the qualifications: minimum credit score 600, but they can go to 500 if you have been profitable for the last 3 years. Okay. And minimum time in business 6 months. Minimum annual revenue $100,000. You got to be based in the U.S. and you need to have a business checking accounts. Number 3, folks, we have here Balboa Capital. Our score 9.5 over 10. Folks, we are still having a conversation about business lines of credit with bad credit. Okay, and what we love with Balboa Capital is that this player is constantly innovating. Okay, they're constantly tapping into a new industry. They're making sure that their products are available to a large number of businesses. So what are the pros and cons here? Pros: you have easy access to financing with low eligibility requirements. They have a speedy funding process. Equipment financing product offers a corporation-only guarantee option. So this is an EIN-only option. This is really good. And what about the cons? Well, the factor rates can increase the cost of financing. You have a lack of pricing transparency, including Balboa Capital interest rates on their website. You know, it's kind of tough to find that information. And you can use this for a lot of purposes, including equipment financing, operational cash flow gaps, feelings. You can actually also use this to expand. You just need to talk to your Balboa Capital representative when you have a conversation, okay? One thing we also need to say that they might have hard credit pulls that may affect your personal credit score. They don't have a soft pull, okay? And the thing is that you're looking at $5,000 to $250,000 revolving credit lines. You have same-day funding, easy online application. All credit is considered. Okay, so if you have a FICO score of 300 or 350, you could be considered, not a problem. You can be considered rather. Now you can. Okay. They have 1 hour approval decisions, and you can repay daily, weekly, or monthly. So they give you the flexibility in terms of repayments. Okay, something you need to think about. And you only repay what you draw plus interest, and they have competitive rates. And what we think about when you think about the Balboa Capital business line of credit, again, you want to think about $5,000 to $250,000. Okay, and the thing here is that if you want to qualify for this line of credit, you need to have at least $300,000. We have seen cases where they actually lowered that requirements to $150,000, but you need to have a strong business plan. You need to have several years, at least 3 or 4 years of business profitability, okay? And you need to have strong cash flows, not cash at the bank, but the movement, the cash inflows and cash outflows must be good. And there are some industries that Balboa is not really going to work with. You know, we're talking about oil and gas extraction, adult gambling, adult entertainment, casinos, aviation, boats, okay? And to qualify, to apply for this, you need to have a certificate of good standing, voided business check, copy of your driver's license, 2-year balance sheet for deals above $250,000, 2 years profit and loss statements for deals above $250,000, 2 years of business tax returns for deals above $250,000, and 3 months of business bank statements for working capital loans. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Study Kiwi Show. We're also having a conversation about business lines of credit with bad credit. Number 2, folks, we have Lendio. Our score, 9.5 over 10. So when you think about Lendio, I want you to think about a marketplace lender. We love Lendio because of the flexibility. They have a diverse catalog of loan options. They have partnered with more than 7,500. Okay, so they have partnered with more than 75 lenders, and we love the fact that they are giving you, they're very generous in their business line of credit for bad credit. So the loan amount, $1,000 all the way to $500,000, no personal guarantee. This is really good. You have a loan term of 1 to 2 year maturity, but for the line of credit, you can have this is a 1 to 2 year review period, okay, and they can fund you as soon as the 1 to 2 weeks, and the interest rate goes from 8 to 24%. And for their business line of credit, you are looking at 560 minimum credit score, 560. Okay, $50,000 minimum annual revenue, 6 months in business. That's the minimum. Okay, so this is really great. We love that. And the interest rate starts at 8%. This is really good. Okay, and Lendio, I've just said that before, is our favorite source for business lines of credit for folks who have a bad or fair credit. This is really good. Okay, and the fact that they are a shopping mall, quote unquote shopping mall for business lines of credit, is kind of cool because you have options, and that's what you need. If you have poor credit, if you have less than stellar credit, you're looking for options, right? You're looking for options in terms of liquidity. So the Lendio will give you those options. Okay, and what are the pros and cons here? Pros: you have fast application, you have a wide variety of funding and lenders, okay, funding options and lenders. You have a personal guidance and expertise. So Lendio will help you with throughout the process. Okay, what are the cons? Well, high interest rates on some credit lines, and there are reports of hard credit inquiries. So when you go to Lendio, you have the opportunity to benefit from a soft pull, but in some cases they might actually pull Equifax, TransUnion, or Experian directly, not even asking you. They might just do the hard pull. Number 1, in our view, folks, when we're talking about the business lines of credit with bad credit, the best one in our view is Capitus. Our score 10 over 10. Okay, so when you think about capitals, you are thinking about a lender that will lend to you no matter what. Okay, you can get access to cash you need when you need it at better rates than a credit card. Okay, and you have fast and affordable business financing, competitive rates, 5-minute application, approval in as little as 4 hours. 4 hours. Did you hear that? 4 hours. And no origination fee. So what are the requirements here? 650 minimum credit score, but they actually can go all the way to 550. If the business has been profitable for the last 2 years, maximum line amount 50% of your annual revenue. Okay, 2 years in business at least, $180,000 average annual revenue. No personal guarantee. We're speaking about pre-tax income here, top of the line revenue. Okay, and so overall, one thing you need to understand is that your business line of credit with Capitus will depend on what you plan to use the funds for, and only you can determine that amount. Okay, however, it's important to remember that the size of the line that you would like to get and what you are approved for may be different. So when determining your credit line size, several factors are considered. Okay, with Capitus, and these factors include your revenue, your time in business, your business and personal credit scores, your industry. Very important. So when we talk about Capitus, we're talking about business lines of credit for bad credit or fair credit that go from $10,000 to $250,000. This is really good. And so if you want to get a line of credit through them, they'll ask you what your contact info is, the type of business you have, how long your business has been running, what your estimate your estimate of your credit score. Okay, what if any loans you already have, your annual gross sales. You can choose the line amount and why you want to have a line of credit, and the business, the information about the owner. This is important. Okay, and you have to think about these things because and why should you consider a Capitus business line of credit for bad credit or fair credit? Well, you can if you go with this kind of funding program, you may want to stabilize your cash flow, right? If you want easy access to a funding source, if you want to save money, you want to use the cash that you are generating from your operations for something else, or if you want to increase adaptability. This is really important also. Okay, and you can use a line of credit if you are a business service, a general contractor, a trucking company, a real estate agent, you are in retail, you are doing plumbing and electric, or whatever the source of whatever the sector you're in. As long as it is a legit source, you can benefit from a business line of credit. Let's have a quick conversation about the business lines of credit in general, folks. This is really important because when we talk about a business line of credit for bad credit, you need to understand that this line of credit works similarly to a credit card. Okay, with a line of credit, you receive access to a set amount of capital, say $150,000 or $250,000, and you can draw funds as needed. You pay interest on only the funds that you draw. This is really important. There are certain fees associated with this funding program. You have origination fee, account maintenance fee, draw fee, and activity fee. So please check with the lender to make sure that you are having the right fees. Okay, and so if you want to get a business line of credit for bad credit, you can go to banks and credit union. Okay, banks and credit unions. This is really good, especially if you already have an existing relationship. If you have an existing relationship with the bank or a credit union, and you can check out online lenders. So, for instance, Bluevine, Fundbox. Those are online lenders. Navy Fed, Wells Fargo, PNC Bank. Those are banks and credit unions. Okay, and to get how do you get a business line of credit? Well, you have to submit some information, right? And this includes your personal and business tax returns, your personal and business bank statements, your business financial statements, that is your profit and loss statement or a balance sheet or a statement of cash flows for the last 2 to 3 years, depending on the lender. Okay, and a business line of credit is kind of cool because you are basically tapping into money that you just repay and can tap it again into the money. You have a funding source, a funding pot that is sitting there waiting for you when you are needing it. Okay, please, before you apply for a business line of credit, research the terms, compare offers, and read the fine prints. Very important. You want to consider factors such as the credit limit, the interest rate, the repayment period, the annual review and renewal, the requirements to be approved, and special perks or rewards. This is really important. And so the requirements to get a business line of credit in terms of credit score, the minimum is not really, it can go all the way to 350 or 300 in terms of FICO. Okay, and also think about whether or not you want a secured or unsecured business line of credit. It really depends upon the asset that you have. If you do have assets, your business assets, and you want to pledge them, you want to use them to collateralize the line of credit, it really depends on you, okay? And so that's what it is. So before I close today's conversation, please check out this short loan evaluation approach video. We have a strict method on this show when it comes to evaluating, categorizing, and listing business lines of credit. Check this out. Quickly recapping our top 8 business lines of credit with bad credit. Number 1, Capitus, 10 over 10. Number 2, we have Lendio, folks, 9.5 over 10. Number 3, we have Balboa Capital, 9.5 over 10. Number 4, we have Fundbox. We have our score 9 over 10. Number 5, we have Blue Vine, 8.5 over 10. Number 6, we have Navy Fed, 8.5 over 10. Number 7, we have PNC Bank. We have 8 over 10, that's the score. And number 8, we have Wells Fargo, our score 7.5 over 10. Thank you so much for your attention, folks. I love talking to you today. I will see you another time, but until then, remember, stay marvelous.